Hello, ladies and gentlemen. We are live here on Saturday evening. Um, I have just gathered some charts here that will show you why I think gold will be one of the best performing assets, or one of the better performing assets at least, for this decade to come. Um, I found, I think, 10 charts where we will measure gold against some of the big um, tickers like the NASDAQ, against Bitcoin also, against debt, against M2 money supply, inflation. And I think we are at a very big moment in time here for gold, and obviously we'll have a quick look at the end on the gold price itself. So as always, like, subscribe, do what you have to do, and we will get straight into business at this moment. So let's have a look-see. First of all, as you can see here, 10 charts, give or take, maybe a bit more, doesn't matter. This is gold against the SPX, the SP 500, and clearly what we have here is the lows back from the early 2000s, major run-up, as you know, from 2000 to 2011, and ever since we have started to form this falling major bullish wedge here. And as you can see here, we are actually very close to a possible breakout here, and the level that will seal the deal for me is roughly in this vicinity here, at 0.5, maybe 0.51 is where we will see the big fireworks for gold. And to have gold outperform SPX, which is such a big stock market for most of the bigger names, institutions, and so on, when they can see that gold is starting to outperform, they will reallocate money into gold purely based on this ratio. So definitely worth to watch here if we can break this, what is it, 12-year long falling wedge here again, which should result to the upside. Again, it hasn't done it yet, but we are very close now, as you can see here from the chart. Gold against the NASDAQ, it's not as strong as versus SPX. However, we are right now in this expanding formation here with 3 touches to the lower trend line. And typically, at least from what I've seen, is that when you have the 3, often you have the breakout afterwards here. So at some point in time, we should break out here against the NASDAQ as well. And again, tech has been performing insanely well, as you know, even the past year also. But ever since the 2000s, tech has performed insanely well, especially the big Magnificent Seven stocks. You know, Apple, Tesla, and all those big names has done tremendously well. So we have a bit further to go compared to the SP 500 or the SPX. But however, I think at some point in time this should resolve to a move to the upside, because we have had these 3 impulse lower lows and a perfectly you can see here the highs and the lows in this expanding formation is more or less to the tick of the 2 trend lines. So yeah, gold is also working to get out of this formation, and therefore gold should at some point in time, maybe a bit later, but should outperform the tech sector or the NASDAQ. Okay, here we have it. One simple chart here, gold against inflation. As you can see, the bond bull market started here when gold peaked out in the 1980s, and ever since, bonds has been performing very well due to lower and lower rates. That is coming to an end. You know, the bond market broke in 2020, early 2020, and now we are just having soon the final nail in the coffin. And yeah, why do you think that so many banks is starting to feel a lot of pressure here? That is simply because gold is also showing that the bond market, our current, the biggest market by far right now, the bond market is about to lose steam against gold. That's why they say that gold is the antidote to the banking sector or to our financial sector. You can see it here again, and gold is just very close to breaking out from that long-term golden trend line. It's a roughly 50, well, let's call it 45 years worth of trend line. And yeah, this is a beautiful cup and handle, actually with an extra handle on there in the making. And again, as you know, 1, 2, 3, fourth time will be the charm. So yeah, that is my take. To gold out. You can see here how well gold outperformed inflation back in the 70s, and we are very close to a paradigm shift when we can get above, let's call it, getting decent above 7.5, 7.7 in this vicinity. Then gold will start to really, really outperform inflation. And just like it did in the 70s, inflation went up and up and up, rates went up and up, but even gold outperformed it way more. And that is what we're going to see here within a year or two, depending on how fast gold can move. Zooming in here, you can also note that we are actually, oh, that was the wrong button, that we are also very close to a smaller structure right here, where gold, I think, when and if we can take out this expanding formation here, you can see we are very close, then that will be the final nail in the coffin, and we will move all the way up to that trend line right there when we break. Here we have gold. Again, I like charts where you just have one trend line that says it all. And you can do that most of the time on very, very long, multi-decade time frames here. So gold against US debt, you can see here, and very clearly again, the 1980 high, all the way down. We have perfect connections. And zooming in here, you can see clearly for the past, ever since the March 2020 madness, you can see here gold is just pounding. And what looks like could be that we are peaking above here for the first time with a monthly close in this ratio again, meaning that gold is outperforming the debt in the system. And again, I think when and if this happened, we will start to see gold reprice itself or reset, reprice, whatever you want to call it, in the new financial system that will be born from these charts here. Again, gold will start to really gain momentum, gain steam against the debt situation that we have. I think if you go to the debtclock.com, I think it is, then you can also see how much gold should be valued given where we are and how much debt that we have. I want to also show you gold against Bank of America. Just want to point here just how beautiful this trend line were back from the 80s into the 2004, give or take. And ever since we broke it, gold went on a major move against the banking sector right here into the financial crisis. Funny enough how they work out. Anyways, here we are actually also in a major long-term bull flag that has been created ever since this major blow off here. And as you can see, if we are to zoom way more in, so you have a bit more detail, I want to scoop that to the side. Again, you can see here this internal bigger golden resistance has been broken, retested now. And I would assume that at some point in time, this major bull flag will complete and will move again more to the upside. So yeah, I think we will go up to here. Then obviously we'll have a pullback. Then we will see. But again, this major flag here is pointing to a lot higher gold prices against the banking sector. So again, this is also a beautiful one here. And this start of the trend line goes back roughly 8 years. So we're breaking that as we speak. I will note that we have some sort of rising wedge here again. Let's see how it plays out. But still, long term, I'm betting for gold to outperform Bank of America, which is one of the biggest banks in the US. So that's quite a heavy deal, to be honest. Here we have gold against M2 money supply. The 1980s high again, same thing again. Here we have the 2011 high, and now we are coming into a shorter term triangle squeeze right here again, breaking out as we speak. And it is my take that we are going to somehow get up to this long-term golden trend line, and then we will probably break out here later on. The direction I do not know. It depends on how fast gold can go. But again, you can see here again, gold is setting up to outperform the M2 money supply in the system. Same thing here. You can see how insane gold were over a 10-year period against M2 money supply. And we are right now again working on getting to the upper golden trend line and then a possible breakout, which I obviously think will happen. So again, very early for gold, and I think, you know, getting into during this decade, I think gold will perform insanely well, giving these metrics. Here we have gold. When you measure it against the Dixie, I look at that from time to time because sometimes I think it actually has a bit more relevance compared to when measured in the US dollars. So I think looking at it every week is not a bad thing. Same thing, the 2000 lows, 2011 highs is here. This is a major bullish sideways consolidation, and we're just waiting to break out. We are currently at 19, getting above 20.5, so roughly 7.5% from here. We will have a major breakout in this ratio, and that is not to be taken lightly. If you measure the flagpoles here, we can actually go way higher than I think most people will actually realize. When gold will start to reprice itself against all the debt in the system, all the inflation, and all that uncertainty that we see in the world right now. Gold knows what's up, and I think it's showing here in the ratio charts that we're looking at. A different take here, gold against Bitcoin. Disclaimer, as you can see, Bitcoin, ever since the inception, roughly 10 years ago, Bitcoin has been blasting, has been the best performing assets by far compared to anything. But I think the steam here for Bitcoin is showing signs that it is slowing down against gold. Clearly, this is 2013. Then you can see we have had these bounces towards what have now created that golden trend line. And in the mid later of 2022, I want to zoom it in here just so you can get a better view. We actually did see a breakout, and now we're just into this green support and resistance zone here again. And for now, this is a higher high and what looks like could be a higher low here again, indicating that gold could possibly be starting to outperform one of the best performing assets over this decade to come. And that's not to be taken lightly, because Bitcoin is roughly, you know, yeah, what Peak is talking about is going to outperform everything. But I think that could be slowing down here from what I can see on the charts. Two charts to go, the gold to silver ratio. The March 2020 blow off was right here. You can clearly see that every major bear market or bull run is very often ending in a major blow off to the upside. A hockey stick move, as you can see here. Boom. That is also when the bond market broke. Funny enough, you know, March 2020, the bond market broke here. And ever since, we had a huge drop in the gold to silver ratio. And now we're in this expanding formation right here. My take is, I want to keep this very short so you can get on with your business. It is my take that the pendulum swung way too far in the other direction. And we're going to see it swing all the way back to the opposite side, which means that we're going to see a lot lower gold to silver ratio. And again, this obviously favors silver way more than it does gold, but it also shows that gold will do very good, because when silver outperforms, that very often means that gold is also running up. It just means that silver is running up a lot more than gold is. And you can see here, the 1.618 FIB aligns perfectly with the 2011 low at roughly 30, and you know the 618 aligns with the 1900 and the 1980s, high or low in this ratio. And I think these two will be met. And given that we had the overshoot, I do actually believe that we will see intraday single-digit gold and silver when this run is entirely over within the next 10 years or so. This is the first leg down, counter trend. Third leg will come, and then I think we will have a massive overshooting here to the downside. And If you can trade your gold or your silver to gold at 15, that would be one of the best swaps that you will be able to make for a very, very, very long time. Again, this would be at a lot higher gold prices and a lot higher silver prices. Last but not least, the chart that most people are looking at always is the gold measured in USD. If you were to look at more or less every single other currency, gold is making new all-time highs, and gold in the USD will always be the one to move uh, the latest because still gold, the dollar is the world currency unit, the world main currency, and so the dollar is the world reserve currency. And I just want to show you, as many of you have seen on many charts on Twitter as well, we are now at the all-time high, and we still have, you can see the 1, 2, 3, fourth time will be the charm, and the first initial move points to that gold will go to 3K, not in a straight line, obviously, but again, that is where we're going, and I think we will see a lot higher prices. I have a price at around 7 to 8K, and we can clearly overshoot that when things get really goes really fast down in the gold to silver ratio. I think we can maybe even overshoot that again. So yeah, again, a strong chart here by gold, and at some point in time within a few months, we will also break the all-time high, just like we have done in all other currencies like the euro, the yen, and all those other currencies that we have out there. Again, this is my take why gold is setting up to be one of the best performing assets here in the next decade, the next 10 years time. Yeah, I think that was all that I had for today. Again, if you agreed, if you disagree, let me know in the comments below. And as always, I really appreciate every single one of you tuning in to these short videos, and I hope you enjoy what I do. Again, have a great evening, guys, and I will get straight to bed. Have a good one. Cheers.